Good morning, everyone. Welcome to our Wednesday morning trading session. Hang on here a second while I do my screen share with you. My name is Eric Senft. I'm going to be your host here this morning. I'll demonstrate to you the Diversified trading system. I'll give you a really quick overview here. For those of you new in the room, Diversified Trading System, or DTS for short, is diversified because we're looking at the market from three different points of view. So we have three different tools to take advantage of whatever the market happens to be doing at that time. So here in the top left, we have the Hawk Scalper. Top right is the Falcon Swing Trader. Bottom left is the Eagle Trend Trader. And the bottom right is the latest addition to the DTS family. This one is called the Raptor. The Raptor is actually like a combination or a compilation or a hybrid, if you will, and incorporates elements of the other three trading tools all into one trading platform. Regardless of the tool that you're using, all the signals develop the same way. First, we get a warning dot. Along with an audio alert that tells us that a trade might be forming. And then when the signal is complete, we're going to get a triangle and a hash mark. That tells us it's decision time on the trade. Oh, we're actually getting a red bar buy here. I didn't think that it was going to fall off that much. All right, so triangle hash mark tells us that it's time to take a signal. I was debating taking this red bar buy that's forming here. But that's going to happen regardless of the tools that we're looking at. So look for that. All the signals are going to produce the same way. Now, we don't necessarily take every single signal. You're going to see there's actually sometimes quite a few arrows that print, especially when the market ends up going sideways, like it did for much of yesterday. We don't necessarily take every single signal here. Rather, we tend to hold out for the higher probability setups, and I'll go over some of those with you this morning. With the Hawk, in particular, I tend to avoid signals coming off of yellow bars. So yesterday, all these yellow bars are telling us is that the market is getting quite choppy and best avoided. Normally what we're looking for is confluence. So what that means is like right here. This is one of our high probability signals right here. This is called the first micro-macro crossover signal. And it's the first micro-macro cross because the micro line, that's this thin one, crosses the fat one, that's the macro line. And it's the first signal that prints where everything is in sync. In other words, we have green bars, green trend line, green filter, and a green signal. That's a very high probability buy signal, and you can see the result from that. All right, so there's the Hawk. The Falcon Swing Trader, we follow this trend line. The trend line is going to change from green to red. That's going to be our directional bias. When the trend line is green, we're primarily looking for buy signals, and when it's red, we're primarily looking for sell signals. Pretty simple, right? Here again, we're looking for the warning dots. Let's see if I can find an easy to see example. Here we go, warning dot. It also comes with an audio alert, a triangle, and a hash mark. This signal right up here, however, was not one of our high probability signals. Rather, this one back here, which is called the late filter entry, and it also happens to be a trend change signal. So the trend change signal occurs when the trend line changes color, and it's essentially our first signal that is in sync. The late filter entry signal produced next, and that occurs when the trend line goes, or pardon me, the filter goes out of sync, comes back into sync, but the trend line never changes color. Very important. And you can see we're working on trend change signal right now, aren't we? The trend line changed from green to red. Here's that big move lower. Here comes some buying effort. We'll see whether or not we produce a sell signal from here. And that will be our trend change signal. And we'll look to short that. Oh, before we leave the Falcon, just a real quick note. These lines that you see on here, this is one of the system add-ons that I'll be pointing out this morning. And this particular one is the ultimate support and resistance suite. No, they are not pivot points. No, they are not Fibonacci retracements. If they happen to coincide with one, it's by coincidence, not design. These are actually based on my own formulation, and I'm, all modesty aside, I think they're much better than floor pivots or fib levels. You can see they do a pretty good job of containing the market where the market is likely to react. And these are 21 lines forecast for today's trading. The 3 lines you see here in the middle, that's the gold line, the blue line above, and the blue line below. This is your median line. This tells us there's 10 lines of resistance above, 10 lines of resistance below. So generally speaking, if the market's above here, we're a little bit more bullish, and if it's below, it's a little bit more bearish. The blue line is primary resistance, and then the blue line down here is primary support. These 3 lines kind of set the tone for the day. If the market breaks the primary resistance and stays above here, produces a signal, well then we're very likely to see it move 2 zones. So it could, first resistance is going to be back here at around 45.81, but if it gets through there, we could see the NASDAQ rally to 45.89 and 45.90 even. Interesting. All right, we'll see how that plays out. Here on the Eagle Trend Trader, well, there hasn't been much trend last few days very, very choppy. But with the Eagle Trend Trader, we have this trading band. No, it's not an Ichimoku cloud. Yes, I know it looks like one. But it's gives us our directional bias. So when the band is like this, we're bullish. We're looking for buy signals. Again, high probability buys. Whenever the market encounters the hard edge, we expect a reaction. And one of those reactions is the red bar buy. This is a very high probability signal for us. It's essentially the market drifts into the hard edge, the bar colors turn red, so suggesting they're more bearish, and then we come back with a buy signal. So we got red bars and a buy signal. That's a high probability signal for us. But right now you can see not much in the way of a trend. Our filter is all chewed up. Our band is waffling back and forth, so not much of a trend right now on the Eagle Trend Trader. All right, finally to the Raptor. The Raptor, as I mentioned, is kind of an amalgamation of the other trading tools, and it incorporates elements of the Hawk, the Falcon, and the Eagle. You can see the Eagle band right here. We actually have a double band in the Eagle. And again, we're producing warning dots right here, so we may get a sell signal if the Raptor trades a little bit lower. I'm not going to take this one just yet because it's not one of our high probability trades. If we don't get a high probability signal soon, I will take trades just so I can demonstrate the trade manager. That's this unit here on the side. And the Trailblazer. Oh, here the Falcons produced a sell signal. All right. So this tool you see me using here on the right-hand side, this is called the Trade Manager. This is perhaps the most important tool that you can own as a trader. What the Trade Manager does is, well, it keeps you from overexposing yourself in a position for starters. See this number down here, 2%? This means that my risk on every single trade, regardless of where I place my stop, will be limited to 2%. So note here, I put my entry on the hash mark, I put my exit above the stop, $360 is 2% of my capital. What if I placed my stop really, really tight? What if I put it right here? Oh, look, it's still $360. How can that be? Well, note what has changed is the quantity. We're going to get another signal here. That's why I can do this. So let's set this up like that. So it's always going to contain your risk to approximately the same amount. You know, there will be rounding errors, but you see I can run my stop way, way, way up here and still not risk any more money. Why is that important? Well, the last thing you want to do is jam your stop in so tight that you keep getting stopped out. I was working, doing a coaching session with a fellow yesterday, and he was running his stops so tight that he would get stopped out on the slightest little hiccup in the market. Notice there's very little structure up here. There's very little in the way of resistance. If the market should turn at this point, it's very reasonable to assume we could get a bigger retrace, right? So why would I place my stop down here and get stopped out early? Your objective in trading is to make money, right? Not to get stopped out early. You don't want your stop to get hit at all. So put your stop somewhere where it's not going to get hit. All right, well, like I said, we'll see how that plays out. We are getting another macro pullback signal here. The hawk's slowing somewhat, but here's a macro pullback. I'll demo this for you as well. And same thing, I've got to run my stop up here. And I've got my preset profit targets. You can also choose your own profit targets if you like. All right, the other component to the trade manager, let's see if we get filled here. I'll open this trade up. No, it's going to retreat from me. All right, well here, you know what? We'll put this on anyway, just so I can show you. We're going to get a little bit of a rally here now. Okay, so we're just following this market a little higher. We're going to look to take a little bit of a move on the next move lower, and I can cancel my Falcon trade because it's not cooperating, so I can close that out. The other component that I'm trying to show you is the stop component of the trade manager. You have 16 different stop strategies to choose from. They're all customizable. I'm going to turn them off for a second. Okay, so we got filled on this trade. So you can see I'm running an auto break-even trigger. So if the market drifts down here, it will hit the break-even target. I do have a high probability profit target in play, but I'm going to delete those this morning just so I can try to demonstrate the stop trailing characteristics of the trade manager. So let's see here what we get. No, stops. I don't want my stops just there just yet. Still. What we're looking for is we're looking for the market to retest this low before rejecting and heading higher. All right, well, let's leave that there for now. Oh, Oh, by the way, I'm following the NASDAQ, but I'm also looking at crude oil and gold, but I would be happy to highlight any market which is of interest to you. So if, you're trading Forex or a stock market, if I can get it in my data feed, I'll highlight it for you. Or if you're an E-mini trader, if you prefer to see the E-mini, I can show that to you also. So don't be shy to ask. Don't be shy to ask questions. If today's trading is going to be anything like what it's been the last few days, it's going to be a real grind. JP is asking for crude. All right, JP. Let's take a look at crude oil. So here's crude now on the hawk. And you can see a lot of yellow bars through here. Yellow bars tell us the market is moving sideways. It's in chop. Two ways to trade chop. People always saying, can you give me an indicator to tell me when the market's in chop? Well, here on the hawk, when you're producing all these yellow bars, you are in chop. Two ways to trade in chop. If the zone is big enough, you can try to buy the bottom end and sell the top end. Personally, I prefer to just let the market break out of the chop, prove to me it can stay out, and then I'll look for signal to generate on the other side. So right now, crude trying to break through the bottom end, but we'll see whether they can stay out or if this is just going to be a false breakout. So there's crude on the hawk right now, threatening to head lower, but no signal just yet. Here's crude on the falcon. Same thing, you can see very whippy. Our trend line keeps changing color. That's not good. Oh, we are trying to produce a trend change signal, so here's the move lower. We'll see if there's a reaction higher. We're into the primary support right now at 46, so we might see a little bit of a bounce from here. Same kind of scenario as what we're seeing on the hawk, really, where the market's drifted outside of this range. They're testing the bottom end, and we'll see whether they come in here and try to give us a signal. Today, of course, crude inventory, so no real surprise that crude oil market is heading a little bit sideways at the moment. And last but not least, here is crude on the Eagle Trend Trader. Nice signal yesterday. About an hour after crude oil opened, we had this nice red bar buy signal. That worked out very well. Had a nice trend change signal here on crude around the London open. So crude in a little bit more of a trending mood yesterday as opposed to, yikes, look at that, what a mess, as opposed to the last few days. And here crude trying to break down. We actually got a rule of three signal. I would be, well, it is a rule of three signal, but I'd be a little leery about taking it because we haven't had a real good retest of the high. A rule of three means that we've got a bullish band, but the market keeps producing sell signals. So we got one signal here, we got one signal here. You could either consider this one or this one your third signal. This one, the band was already a little bit bearish. But the rule of three, sometimes you get two signals, sometimes you get four. The principle remains the same. Namely, you producing sell signals in what should be a bullish market. However, the rule of three must always be preceded by a retest of the extreme. In this case, the extreme is the high. And we don't really have that yet. In hindsight, we may be able to say, yeah, okay, this was it right here. But normally, we expect something a little bit more pronounced. So we'll see how that plays out. In just a moment here, I'll load crude onto a Raptor chart, and you can see crude on the Raptor. All right, so here's crude oil now on the Raptor. And yesterday, again, a little bit better day. Got a nice hard edge bounce here. Just like with the Eagle, whenever the market encounters the Raptor clouds, we anticipate a reaction. So the market drifted down, gave us a hard edge bounce, came out, produced a buy signal. Boom, up she goes. Then here we had what we call a trend change signal, or a cloud crossover. So the clouds go from bearish to bullish, and when that happens, we expect the market to retreat into the cloud and for the cloud to offer some sort of support to the market. So it came out, produced a signal, and away they go. So not too much out of crude oil just yet, but like I said, it is inventory, so the market might be a little bit slow today. We can expect, again, the market to move into this trading band, into the cloud, and then for the cloud to bounce it out, to spit it out. That would be what we're looking for. But at the moment, no, the Raptor not really producing any crude signal. Nothing I would want to risk money on anyway. This tool right here, I forgot to mention when I was looking at the NASDAQ, this is the Geiger Counter. This is also an add-on tool. And what the Geiger Counter does is it's essentially a tape reader. So you can see the visual of the time and sales. You also get the actual time and sales producing right here. And then you have this needle that turns green when the market bias is more bullish, white when it's neutral, and red when it's more bearish. And then you got this nifty little dial around here. This dial is very helpful for helping you decide whether you want to get into a trade or whether you even want to get out of the trade. So with the dial, if the market tends to pull and hold, see how it's pulling there, or trying to pull to the bear side? If it can pull and hold for like 3 or 4 or 5 seconds even, that shows me that there's a lot of selling activity and they're just trying to chew through those orders. However, if it pulls to the buy side and holds, well, that tells me that there's a lot of buying going on, and that in which case we'll see a little bit of a move higher. Oh, you see that? They're holding, they're holding, they're holding. Oh my gosh, the sellers are just piling it on. So if we were producing a sell signal right now down here, I would look to short below that sell signal. Oh, see, here come the buyers. Oh, the buyers, oh, what a fight. This bar is a real determinant. This bar is going to settle which way they're going for the next leg. All right, but that's a Geiger counter. Like I say, a great tool for helping you to judge whether you want to get into a trade or whether you want to stay in a trade you're already in. All right, so what's going on here with the NQ? Not much. So we had a first micro-macro cross signal here. It went down, hit its profit objective, came back, gave us a macro pullback signal. I shorted that. There's very little follow-through at the moment. If this leg moves lower, I will start to roll my stop in. But right now I'm trying to give these guys every chance to get this trade in order. We are actually producing a first micro-macro cross higher. So there's a realistic possibility the market's going to get up here to around 47, 77, 78 maybe, before it tries to turn around again. Because that's where our high probability profit target would be. The nice thing about using the trade manager, though, to structure your trades is that worst case scenario, I know that I have only lost, let's say the market just makes a beeline higher. Doesn't give me a chance to get out, no retracement, no nothing. If I get tagged here, I have lost, or I have contained my loss to 2% of my trading capital. That's only 2%. Right? That is good money management. Poor money management is putting your stop in ultra tight, hoping and praying you don't get hit. The market engages your order and then quickly turns around and stops you out. I don't care if this only cost you, $60 or $70. It's not a stop until it gets hit, right? Think of your stop loss as a safety net. This is where I know I am totally wrong about the trade. That's why I put my stop way up here and not above this swing high. When this trade was forming, I could have placed my stop right here, right? It's right above that swing high. How do I know that's going to be far enough away? Well, I don't. I don't know if the market fills me and then drifts higher. Can I say at this point the market's not going to go lower? No, of course not. It's too tight. I could use the crest in the macro line. Sometimes that's a pretty good spot to hide a stop. But if the dollar amount stays the same, if I put my stop here, here, or here, why would I not go with the bigger stop? I'll let you ruminate on that one for a little bit. Tom asks a good question here. Do you have a preference for the trade manager or the trailblazer? Good question. So that's the trade manager. The trailblazer here on the Raptor was designed to be a faster entry tool. We had some owners who were trading some very fast markets, and they were saying, by the time I select my entry and I set my stop loss and I hit the submit button, the market has already moved too far. I can't get into my trade fast enough. I need a one-click entry system. That was the impetus behind the Raptor. The Raptor, I hit the buy or sell market buttons, and automatically I'll get a trade however I've set it up here. So currently I'll get one contract, and I have a preset target at 20 ticks. I have another contract with an open target. And if I enable my stop strategy, now this isn't a trade, I'm just going to demonstrate this for you. Okay, so my stops are down here. I'm going to produce a warning, buy signal. Well, that is actually a signal now. It hasn't engaged just yet, but I'm going to demo it for you anyways. Watch what happens if I hit my buy market button. All right, so automatically I've got my entry. Automatically, I have my stop loss as per my selected stop strategy. You know, if I want to do a swing low strategy, keep it a little further away. Oops, it just so happens to be the same zone. Let's try this. Oh, for crying out loud. There we go. I automatically have my break-even trigger. I automatically have my preset stop or profit target. Now, once the trade goes live, I can move these things around, right? If I want to put my break-even trigger here, or if I want to put it a little bit closer to my profit target, or even if I want to change my profit target, I can move all these things around once the trade goes live. Now, here I'm going to show you, we're actually in a trade, and I'll have a chance to show you how the trade manager actually rolls the stop. So as the bar completes, and let me eliminate this here for a moment. Did you notice how when this bar finished higher, the trade manager automatically took the trade or my stop loss and rolled it to the next level? Watch if this one goes higher. Oh, you see that? It moved higher. So what that means is this is a hands-free trade now. I can put this trade on the shelf and I can look for another opportunity somewhere. Right? I don't need to babysit that trade anymore. I can be watching a setup in crude oil that maybe I like, or a setup in gold. Now, Tom asked, do I have a preference? No, not really. They're designed to be different. I really like the risk component on the trade manager. You see here, the Trailblazer does not have that built-in risk component. So what that means is you need to know more or less what an affordable position size for you is, so you don't overextend yourself. We also have the break-even feature. See, if I get a little anxious about the trade, I can force it to break even. So if you're trading fast markets and you know more or less what your position size should be, the Trailblazer might be a good fit for you. Otherwise, if you don't have a clue what your average risk should be and you want to keep from blowing up your account, the trade manager is the tool for you. This, no word of a lie, folks, is the most sophisticated piece of trading software, this trade manager, that I have ever come across for the retail trader. This is the kind of stuff people on Wall Street use. Except they've got, you know, theirs is even more sophisticated and worth 10 times what the trade manager is. There is a lot of stuff in this particular tool. And the beauty of it is you never risk more than you can afford to lose. So let's say we take a look at this trend change signal right there. So if I place my stop right here, note the risk, $315, and the quantity is 3. I'm trading 3 contracts. If I place my stop down here, okay, a little bit of a rounding issue going on, but $235, but the quantity is 1. So the trade manager always protects you. It always optimizes your position size so A, you don't lose more than you can afford, and B, you earn as much as is possible. So you're maximizing your earnings and you're minimizing your losses. Didn't I read that somewhere? I should do that. I should limit my losses and maximize my profits. I'm being a little facetious, of course, but that's the whole point of trading, and yet it's the exact opposite of what most traders do. In my coaching sessions with people, the vast majority of the time, people come to me And I see them doing the exact opposite. They minimize their winners and they maximize their losers, and then they wonder why they're not making any money. They get all fidgety when I tell them place yourself a reasonable stop, and yet they'll think nothing of getting stopped out early 2 or 3 times. As you can see, my stop hasn't been hit yet. I'm debating rolling it down here above 45.80, as the sellers have made a pretty decent effort to try to push the market lower. So just because my original risk is up here does not mean it has to stay up there, obviously. No, I don't like that. That's still the wrong spot. Well, you know what? We'll just let it go a little bit. If the sellers give me a little bit of a swing through here, then we'll start rolling our stop. Last thing I want is to get stopped out for a tick or two only to watch the market fall off the map. All right, well, we'll put that on the shelf. So our Raptor trade, it would have hit the break-even trigger. So we got stopped here at break-even. The buyer's definitely trying to get stronger, but I can't help but think the sellers are going to knock him down one more time after that huge move out of the open, right? This big move. The market opened, boom, fell off the map. Well, not quite off the map. But for 3 minutes, there was nothing but selling. Sell, 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 sell. Oh, or are we back into yesterday's trading range? Yesterday, the market was kind of pinned between 45, 65, 66 and 45, 80. Well, I'll take a trade here or two in a moment if we don't get something shaping up, just so you can see how all the features of the tools work. What time is it? Oh gosh, it's only a little after 7 o'clock. I'm here on the Pacific Coast, so 10 o'clock Eastern, crude inventory not out for another 20 minutes or so. Gold making a nice little dip here on the Falcon. So we had a couple opportunities to get in here on gold. First off, we had our trend change signal. It occurred right here. Note the trend line changes from green to red. We get this little characteristic down, up, down pattern, which shows us the sellers taking control of the market. That's the part that changed the band color, or pardon me, the trend line color. Then we see the buyers trying to fight it back. So we get a couple of green bars, and then the sellers say, oh, no, you don't. And they come back with our trend change signal. Very high probability signal. That was followed by what we call a trend line touch signal. That's this guy right here. And the trend line touch signal, the market is now in a bit of a downtrend. We get that little bit of a retrace into the band. The market comes out of there, produces a sell signal. And you can see that was probably a pretty decent trade for gold. Wahoo. Just tapped our high probability profit target, and now we see a little bit of support coming into the market. All right. What's the NASDAQ up to? The bears show up yet? No, not yet. Remember how I told you we needed a bigger retest of the high? Well, that's what we're getting. Getting that big old test of the extreme. The way it's shaping up, though, starting to look like another trading range kind of day to me. All right, here's the first resistance line, 45.81. Remember I said we could see it drift up here to 45.89, maybe even 45.90. Let's see if we get a reaction off that resistance line. If we do, this will be the point I'm going to start rolling my stops on my hawk trade. Now here on the hawk, I've got another little add-on, and these add-ons work on any chart, by the way. They're not DTS specific. If you want to put the Geiger counter on a 5-minute chart, great. You want to put it on a 1,000 tick chart, fantastic. These will all work. Same thing with the support and resistance lines. They work on any chart, whether it's a time chart or a tick chart or whatever you happen to be using. This tool here on the hawk in the top left, this is called the Day Ranger. This is another one of these system add-ons. So it gives me the ranges, the average ranges for 30, 10, and 5 days, yesterday's range and today's range. So you can see the market is contracting a little bit. 30 days ago, we had ranges of around 230 ticks. 10 days ago, we had a range of about 166. 5 days ago, we had a range of 143. Today's range 86, yesterday's range 96. So the market getting smaller, starting to wedge up or contract, drift sideways, however you want to see that. So why is that important? Well, you get an idea where the market is going volatility-wise. So volatility seems to be decreasing, hence all the sideways movement. I know chop seems like volatility, but really it's not. A sideways market is a happy market. Not happy for us traders, but you know, money-wise, the NASDAQ is very content to be trading around 45.80. Anywhere between 45.85 and 45.70 seems to be a happy place for the NASDAQ. So I know the average daily ranges are contracting. I know the 5-day range is around 143. Yesterday's range was barely 100. So if I wanted to take, say, 30% of today's range as a profit objective, well, I could preset that as a profit target. I could preset 30 ticks as a profit target. Or if I wanted to use it as a stop loss, I could say, all right, what if I want to give up 25% of the daily range as a stop loss? Well, that would mean you're running a 25 tick stop. So we go here to our fixed stop strategy, and let's say I want to run 25 ticks off the high. That would place my stop up here. it's going to roll it back here in a sec, or I can force it to roll back. Here we go. So if the market moves lower now and these stops catch up, I will be 25 ticks off of the high. Oh, come on, you guys. The market's been pushing higher for like the last half hour. Not big pushes, but still bottomed out here. Oh gosh, almost an hour now that we've been pushing higher. Alright, so you see how they're trying to come down here. The stops will get picked up here in a moment. Oh, don't tell me the sellers finally decided to show up. Alright, so you see the trade manager has picked up my stops and is now rolling it according to the stop strategy I've selected. And they're going to hold me 25 ticks off of the high of the last bar. Come on, you stinkers. So it looks like 45, 74, 74 half is going to be a little bit of a trouble spot as the buyer's likely to try to show up there again. By the way, while I've been nursing this trade, we got a first micro macro cross to buy here. There was a buy signal. And here was another buy signal, both of which worked out. This is not a buy signal because it's off of yellow bars. Remember I told you about yellow bars? They're neutral, so we don't trade the yellow bars on the hawk. There is one exception. It's called the 4-arrow consolidation. It's one of our high probability setups that we look for. Ooh, the buyer's fighting hard. So notice now with the trade manager, because this bar finished higher than this bar, see how it bounced back up here? How this is 25 ticks off of the high of this bar? It did not move my stop higher though, did it? So my max exposure right now is 25 ticks off of the high of the lowest bar. If the market reverses at this point and stops me out, well, then it stops me out. And you can see I've reduced my risk somewhat as well from my original risk exposure. I've taken a little bit out of the trade. So those of you worried about risk-reward ratios, you don't have to fret. You can get yourself to a positive risk-reward. As you can tell, I'm not a big fan of risk-reward ratios. I much prefer to trade the probabilities. I don't believe that you should take a trade or not take a trade on based on something you have no control over, namely the reward side of the equation. The only part of the trading equation you have any control over is the risk side. So that should always be your guide. Essentially, get an amount that you're comfortable risking, whether it's 2% of your account or 1% or 0.5%. And then if you can afford the trade, take it. The trade manager will keep you from blowing yourself up. Come on. The NASDAQ owes me one more move lower. They can't make a big move like that in the morning and not give me one more press. Come on, you guys. There they go. Come on, get down there. If they fail on this swing, excuse me, if they fail on this swing here, I think we might get a little bit more bearish follow through. About 10 minutes to crude inventory, at which time we will go to, well, we can do it right now, I guess. We're not missing a whole lot here on the NASDAQ. So here on crude, and I'm just choosing the Falcon. Around crude inventory, very often what I like to do is the market has an obvious high and low. I'll bracket those and I'll let the inventory report spur the market higher or lower. To do that, I'm going to use my OCO function. OCO standing for one cancels other. So with the OCO function, we actually enter our orders directly on the chart. And these orders are live the moment you put them on. So I have a tendency to place them away and then drag them into where I want them to be. Next, I need to have a stop strategy in play. Maybe we'll use something a little more conservative like the chandelier. Yeah, that looks pretty good. Keeping the stops a little bit further away. And we'll enable those. Okay. So we'll revisit this a little bit closer to inventory, the report release. And we're all set to take advantage of crude on a breakout from that trading range. Well, the seller's starting to lose a little bit of steam. If they don't pick up the market from here, then I may as well take my stop out. See, at this point I can say, okay, if the market trades above here, yeah, I'm wrong about this trade. Time to go. All right, let's see if we can get through this 45-75 area and this trend line that's being a little bit annoying. Where's Ray Burke when I need him? Ray with his characteristic push. Oh, it's working. Push. Use the magic mouse. That works too. So if you take your mouse and you kind of pull the bar down a little, it will help get prices to move lower. See, it's working. There we go. All right, so the trade manager picking up the stops again, starting to roll them down. We are getting a red bar buy. This is going to be the last chance for the buyers to recover the market. See how they're scrambling. We're getting red bars with the green warning dot. This is actually one of our high probability signals. The red bar buy, however, can be sold. So you can look to buy it or you can look to sell it. And if you think this is confusing, it's not. It's actually very simple. Let me show you what we call the cheat sheet. Here's the cheat sheet for the hawk signals. And you see, we're just really looking for these 5 high probability setups. The first micro-macro cross, when the micro line crosses the macro, high probability signal, everything is in sync. The macro pullback, everything stays in sync except the micro line, it changes color, so very easy to identify. The 4-arrow consolidation, so when the market starts to drift sideways, we look for the 4th signal, and that's when we expect the market to rally. And then there's the post-consolidation pattern. This one also happens to be a macro pullback. And then last but not least, the red bar buy or the green bar sell. So you get red bars, you get a buy signal, the market makes a last-ditch effort to go higher, so you can try to buy it higher. This one did hit its scalp target, or you can just set up to short below the low. And you can see you could have had this one both ways. So we got the warning dot. We don't have the signal just yet. Sellers stepping in here. Oh, only a couple minutes to crude inventory, so let's go over now to the crude oil chart. See what I mean about having the trade manager? Trade manager is managing my NASDAQ trade. I don't even have to watch it. I can go here now, watch the crude inventory. Let's throw a Geiger counter on here. So we can see the order flow. So in a moment, you're going to see these numbers get a lot bigger and a lot more active. Currently, we're trading, onesie-twosie kind of stuff. We're going to see hundreds of orders fly through here in about a minute's time. And still very balanced, right? We see a little bit of buying, and now the dial will swing the other way. We get a little bit of selling. Oh, no, the buyer's holding on a little bit stronger. But this is how I like crude inventory, when we have an obvious swing high, obvious swing low, and the market is dead in the middle. All right, about 20-30 seconds to inventory release. Stops are turned on. Yes, that's good. Oh, I think I still have my break-even trigger turned on. Oh well, too late to turn it off. All right. Oh dear. Well, there's the roller coaster that's crude. Was that crazy or what? Now, the other way to trade crude inventory is to let the report release, as it did just a few seconds ago, and you saw all those bars just splatter across the screen, huge shotgun. You can let the report release, and then you can bracket the range and trade accordingly. So that big range hit our break-even trigger, stopped us out. That was a wild inventory report. Oh my gosh, that was crazy. We haven't seen one of those for a long time. Okay, actually getting a sell signal now on the Falcon. Problem with crude, however, is covering the trade, right? Even if I cover to my stop, well, can I cover it there? Oh, I can, actually. This is awfully cozy for crude. But you can see it's just about to, there we go, kiss our profit target. Now it's going to come back and produce another signal, maybe. Oh yeah, there it is. There's another signal. Oh, it's trying. We're just getting the warning dot. We don't have the complete signal just yet. Remember, our trend line is red, so we're looking for sell signals. We're not really all that interested in any of the buy signals that are printing. All right, well, that was crude inventory is always fun to watch. It's always, or almost always, a roller coaster like that. A little bit crazy. Crude, of course, not for the week of heart or account. Now here I want my, oh, you know what? I'll put my stop just a couple ticks higher. Oh, that's not what I wanted. I want my stop right here. I forgot it goes above the last high. When I dialed it back a little bit, it goes above this last bar. But as I said, you can always just grab your stop and move it wherever you want it. You can see the hawk a lot more yellow bars again. Here the Raptor, a lot of yellow bars, a lot of sideways trading. I'm sorry I couldn't show you more trades today. The market's just one of those markets. Here the Falcon, you know, your trend line's looking like a roller coaster. Your filter is like a tartan. There's just no decent signal coming today. So spend a lot of time sitting on our hands. Getting a buy signal now here on the Eagle. This is interesting. The buyer's trying to muster the market. All right. So what we've got is we've got what we call a second push entry. Essentially, the signal has engaged, and we wait for the market to retrace from the signal to show us its current limit. So we know that at the moment, the market's only going as high as 45.78 3/4. So if I place my stop just above there, or my entry stop just above there, I'm looking for some renewed momentum to bring me into the market. Now, normally I don't do this. If I'm short one trade or short on one position, as I am up here, I don't normally look to buy into another. But I do think we're going to fail on this short, so I may as well take my stop out. There we go. So Tried to nurse this trade back into a profitable position, but the buyers would have none of it. But the good news is I was able to reduce my risk from my initial exposure. All right, so here we are now in the Eagle trade. Not quite time to start rolling stops though. Let's see if I can. When the market is this sideways, do yourselves a favor and run the deepest stop you can. And again, the trade manager will afford me a deep stop by adjusting my quantity. Right? If I ran a tighter stop, I may be able to get another contract in play, but I also reduce the probability that I'm going to be right about the trade. Okay, crunch time now for the buyers. We got to see them take out this 45.81 half. We need to see 45.82, and then we should be okay. If they can't get above here, you're going to see me get much more aggressive with my stop. Crude, a bit of a mess now, as is gold. Gold's been a bit of a mess all morning. We did get some decent signals. Here's gold on the hawk. A very late first micro-macro cross, but it is still a micro-macro cross. Nice macro pullback. Now we're into yellow bars, so that negates any signal. Nice macro pullback here, and 4-arrow consolidation and first micro-macro cross, all kind of overlapping on each other. Here's a macro pullback, also got down to its profit target. So a few scalping trades out of gold, but kind of everybody's in a bit of a choppy mess here this morning. What's with that? Come on. Not liking the rejection here at the 45.81 half area. All right, I better start looking at a more aggressive stop. Now, you can preview different stop strategies without actually engaging them. May end up going to the parabolics. When you see one that you like, all you need to do is click accept, and then that becomes your new active stop strategy. So you can change your stops or your strategies mid-trade. Come on, get up there. Tom's asking how many stops on the Trade Manager and Trailblazer. 16 on both tools, and they are all customizable. You can change your settings, if you want to go to the percentage stop, and you can, dial it up a little bit, make it more conservative or more aggressive, whatever you like. Whole slew of moving average stop strategies. Swing high-low. The bar high-low and the parabolic are among your more aggressive stop strategies. super trend, chandelier, and ATR are all ATR derivatives, average true range based stop strategies, and then you have your fixed high-low strategy as well. All right, they're making another press here at the 45.81 half. Come on, get in there. You stinkers. Here, give it a little push with the mouse. So the magic mouse is still in beta, but it will move the market if you do it right. Still beta testing this one. Come on, get up there. There we go. Come on, a little bit more. Got to just hit it just right. Okay. So if we see a tick 81.5 here, and certainly if we see a tick 41.82, we're going to see some of these sellers bail out of their position. That should give us a little bit of a move higher. This is just our hard edge bounce signal on the eagle. So we got the hard edge, we got the green warning dot, the triangle hash mark telling me the trade parameters are met. Everything is in sync. So let's go. Oh, there they are, 81.25, and then they backing off. Come on, 81.25, 81.25, 81.5. There we go. All right, 81.75. Come on, give me 82. Oh, don't make me bring out the mouse. Come on, there we go. Get up there. Oh, well, at least I got to show you a couple of trades today and how the tools work. But like I said, this tool right here, the Trade Manager, is very important to your trading success. And I'm not just saying that. I can tell you from years of helping people, one-on-one coaching, most people lose money because they have no money management. I won't even say poor money management. They have no money management. They're totally managing their capital wrong, and then they wonder why they go bust. They maximize their losers and they minimize their winners. The exact opposite of what you should be doing. This tool allows you to trade just like Wall Street trades. Well, on the money management side. Wall Street traders, of course, a lot of them high frequency traders. But on the money management side, they never risk more than they can afford to lose. How do you think they pay for those fancy office buildings and those fancy cars? By losing money? Ha ha ha! Nope. All right, so we're creeping up a little bit here. Maybe with a little bit of luck, we'll see the market hit the break-even trigger. A parabolic starting to roll me up anyway, a little bit. I'm very comfortable keeping my stop a little bit tighter here. So back near the highs of the morning, this is going to be the next real obstacle. The sellers very well may knock the market down from here. This is going to be a big bar for us right here. If the bar finishes bullish, then I think we're going to be seeing a little bit of a rally. If it finishes bearish, well, we could be looking at the next leg lower. And it would reconfirm that the market is in a sideways range, right? Because this is kind of the top end of the trading range where we're trading right now. Looking something like that. So if you have any questions, this is a good spot for them. Not much going on. Can't even, I know it's summertime, but I can't even say it's like summer trading because even summer trading has a little bit more flow to it. Dan asking a very good question. Does the Ultimate Support and Resistance Suite work as a standalone program, or do you need the DTS and or Raptor to use it? No. All these add-ons are standalones. So the Geiger Counter is a standalone. The Ultimate Support and Resistance Suite is a standalone. These will work on any kind of chart. Oh, one thing I did forget to mention, speaking of standalone add-ons, system add-ons is what we call them at Indicator Warehouse. You probably noticed that some of these bars are wider and some are narrower. Those are the dynamic equivolume bars. Again, an add-on or a standalone program. For those of you unfamiliar with equivolume charting, equivolume bars show you the volume associated with the bars. So fat bars have more volume on them than thin bars. What surprises a lot of people is that when the market is trending, it's usually trending on very light volume relative to each bar. And when the market finds resistance or support, the bars get fatter, right? So it helps you identify which resistance areas are more likely to be influential as well. You just look for the fat bars. So again, this is a system add-on or a standalone. What makes the dynamic equivolume bars unique is normally equivolume charts will only work on regular candlesticks. The dynamic equivolume charting will work on any chart style. That means you can use them on tick charts, you can use them on Renko charts. I'm using the mean Renko bars from Indicator Warehouse, which are default for the DTS system. You can really use it on anything except point and figure charts and some of those exotic Japanese charting styles like Kagi charts and stuff like that there. But yes, the Geiger Counter, the Ultimate Support and Resistance Suite, the Day Ranger, those are all standalone type things. Oh no, I don't want to see the market turning here. All right, you leave me no choice. Here comes the mouse. Actually, I don't even want to risk that much. You see this candle right here with this tail to it? That's all I'm going to give them, is that right there. If they fail at that point, then that's probably enough for me. They're supposed to be moving higher, so I'm going to go with the bar high-low, and I'm only going to go a couple bars back and maybe a couple ticks off. There we go. That's all you get. And again, if I'm really anxious about the trade, I can just hit the break-even button. There, take that. I can say, all right, you fail below the low here of this bar. Go ahead, take me out. Yeah, you don't like that, do you? Come on, get up there. Get up there. Tom saying I need to decide between the Trailblazer and the Trade Manager. If you're really stuck, I would default to the Trade Manager. I really think this risk component is a huge bonus. With the Trade Manager, and I'm just going to demo here, you can always just hit your, let's enable a stop. Oops, don't want that. Let's enable the ATR stop. There we go. You can always just hit your buy button and it will default to this quantity up here. So you can simulate what goes on with the Trailblazer, even though it's not exactly the same, it's close. So what will happen is if I hit the buy market button, I get my stop, I'm running a break-even trigger, I get the break-even, I don't get the profit target, however. The Trade Manager will give you, or pardon me, the Trailblazer will give you that preset profit target. But again, it's not the end of the world, right? I can either punch out with profit once, the trade adds up and I say, oh, well, okay, there's $100 in the trade or whatever, I want to take it, I can always hit the close button. Or I can right click and I can manually set a profit target as well. But if you're torn between the two, my personal opinion is that this little risk manager component to the Trade Manager is a big deal. That's my 2 cents anyway. All right, so it looks like the mouse action helping here a little bit. Come on, get above there. Get Snickers. So we're battling the highs of the day right now. It's 45, 80, 84. 84.5 is the number we need to breach. Come on. No. They keep going up there, they keep getting knocked back down. Ryman says, I just bailed out. I took 5 ticks. The market's too slow for me today. It is a grinder's market, folks, and it's going to be like this for the next, month and a half. Good time to break out the harmonica or your guitar while you wait for the next signal. Yeah, unfortunately, DTS can help us take signals, but it can't make the market move faster. Dan's asking, why is that? Well, it's summer holidays, Dan. A lot of traders really just not participating in the market. The market will still be responsive to news reports or, if anything disastrous happens, you'll see the market respond. But yeah, really it's as simple as summer holidays. People just getting out of town. The summer slump. Oh, Tom's asking, what are the bars in the left corner? This is the trade forecaster. Trade forecaster a little bit off the mark today. The trade forecaster tells you what the current market condition is and what the next one is most likely to be. So the trade forecaster says, hey, we're in trend mode for about another 36 minutes, after which we're moving into swing mode. Well, it hasn't been a full-on trend, not like this. This is usually what happens when the market is in trend mode. But today, the market a little more reluctant to move. Trend mode usually means that the market, it doesn't always mean the market's going to make a beeline higher or lower, right? It doesn't mean that you're going to get one of these things kind of happen where the market just goes, oh shoot, it can't draw my lines, there we go. Where it's just boom, boom, boom like that, just one bar after the next after the next. Rather, trend mode usually means that your pullbacks will be minimized and your follow-through should be greater. So that means for you that normally you can run a tighter stop and maybe a more aggressive profit objective. The opposite end of the spectrum, when the market is on scalp mode, that means that the market is going to tend to be more whippy. So what that means for you is that you're probably going to want to run a wider stop so you don't get stopped out in the choppiness, and maybe you want to run a more conservative profit target, or you want to go all in, all out on profit when you have it. The swing signal kind of falls in the middle. The trade forecaster works a lot in the same way as a weatherman trying to forecast the weather. Namely, the trade forecaster will look at what's been going on in the market for the last month and a half. So, your weatherman, he looks at, or she looks at the temperature, the barometric pressure, the wind speeds, the humidity, and they take all these factors into consideration and they say, oh, well, the last time all these conditions were present, this is the kind of weather we had. Trade forecaster does the same thing. It says, okay, last time all these market variables were present, this is the market condition. So like I said, trend mode does not always mean the market's going to go screaming higher or lower. Very often it does. I can guarantee you that when the market was doing this, we were in full-on trend mode on the trade forecaster. And when the market was doing this, we were either in swing or scalp mode. But today, it looks like the trade forecaster not giving us that screaming market higher, but rather saying, well, your pullbacks are going to be controlled. They're not going to be very deep pullbacks, which they haven't been. And the follow-through should be greater, but we haven't seen a whole lot of follow-through to the upside just yet. All right, so that another add-on tool, another standalone, something that will work on any chart style and any chart program. All right, you guys, I think we're going to button up the room for this morning. If you're trading this afternoon, it does look like we are in a trading range. Looks like we're stuck here, so you can probably expect the market to maybe tail off a little bit. Look for selling to occur, kind of here in the top third, buying to occur down here around the bottom third, things just to be a general mess through the middle. The best plan of action right now is to let the market break, show that it can stay out, and then look for your buy signal. Or if it chooses to retreat, let it break, stay out, and then show you that it can stay out and look for that signal. Anything in between here is going to be, it's just going to be tough slogging. I would not be overly aggressive, bullish or bearish, as it looks as though the NASDAQ is going to continue in a sideways drift. All right, well, we're going to close up the room. Thank you very much for your attendance here this morning. I hope it was at least a little bit helpful in answering any questions you might have had about the DTS system. The DTS system is good, but we can't make the market do stuff, unfortunately. DTS owners, I will see you in the trading room again tomorrow morning. Hopefully the market will be a little bit more active at that time. And we will have another open house room next Wednesday, so I hope to see you then. Bye for now.